Fam, this is Mr. Royce. I'm back at you with this bread talk. Once again, we're getting into the New York Stock Exchange. We're just going to deal with different stocks that are popping right now, that what I'm seeing as a trader. And this is just to enable you to excel in investing. As before I begin, I'd like to go ahead and state I am not a stock advisor. The Bread Talk and Mr. Royce are not financial advisors. All videos, media, information, and education are produced for entertainment. Investment in stock always involves risk. Be properly educated before investing. If you would like financial advice, contact a financial professional in your area. About me, I've been investing since March of 2020. I've really enjoyed the earnings, and I'm very happy and about helping people excel in investing. The mission of myself and the Bread Talk is to enable you to excel in investing. So we're just going to go quickly, and I'm shooting for videos that are about 10 to 15 minutes, and we're looking to try to go live Sundays at 9, and we'll add some more videos as we continue just to help you excel in investing. So we're going to go over what's really happening right now that I see in the market right now. We have a situation where the market has been very slow for the past 2 weeks, and it just really woke up last Thursday and Friday. So we saw some pretty good earnings Thursday and Friday. Some of the top earning and grossing stocks that we saw, and I'll go over the whole list of what we're dealing with right now. Number one was Catapult. I'm really excited about Catapult. Catapult has been dipping into the $10 price range, which is a good buy opportunity, and it's been jumping back up within about a week into the $11 price range. So if we look at that, that's an opportunity to, of course, buy at the $10 range and sell at the $11 price range for a profit. Also, we can hold some stock and continue to hold and increase our earnings. So we can increase our earnings as we see profit. Catapult is a new stock, so it's a recent IPO, and about $10 is the lowest it's ever gone. So it's been doing really well. I'm excited about the movement on the stock. Next up on my list is Urban One. That's U1K. Urban One is, of course, a stock that I'm incredibly familiar with. The Bread Talk family is incredibly familiar with. So we're really happy about the results of what it's doing right now. It's bouncing from about the $4 price range to the $5 and up price range. So I've been purchasing U1K in the $4 price range, and in the $5 price range, I'm selling some. So just quick profit, daily profit. And also I'm looking to expand my holdings in that. I'm not sure. I've heard news that Urban One is coming out with another stock. I don't know if that's going to split from Urban 1K, but the movement in the stock looks like it's some growth is coming in Urban One, and also its twin, which we'll talk about later, the other Urban One stock, UONE. Next up on the list is MCW, Mr. Carwash. I think the bottom price on the 52-week chart, the lowest it's been is about $19. So that's an IPO. It's an initial public offering, and that's an opportunity to have ownership in a car wash. I do own about 20 shares. I'll be looking to expand to about 100. It's about $20 a share, and it did see some increases of about $1 or $2 on Friday. So there's a good chance that that might increase pretty substantially, and it's an IPO, which is a little risky, but I am investing in Mr. Carwash, MCW. Next is CXM, another IPO, Sprinkler. That one has seen about $2 growth in the past 2 days, which is really incredible for a stock. Again, the stock market has been very sleep, very lethargic. So maybe a small change amount increase on some of these stocks, and a lot of these stocks are just decreasing. So for that one to have gone up $1 or $2 in a couple of days, and it is an IPO, I'm actually impressed with the movement of Sprinkler. I do own CXM, looking to expand into about 100, and I think I have about 20 right now. Albertsons, excellent stock. Where I'm from, United Supermarkets is owned by Albertsons, so it's just a wonderful place that's always been there since I was a kid. Consistent stock. You're not looking at a whole lot of growth in the stock, but it's very sturdy. I'm looking to continue to purchase ACI, Albertsons, and it does have a pretty substantial and steady dividend. I'm not sure exactly how often it pays, but it is a pretty substantial and consistent. PBI, this one I have highlighted. PBI is Pitney Bowes. This company basically controls anything with a mailing machine. They basically control it and run it. So that one bottomed out at the Corona dip in 2020 at about $5, and that one's up to about $9 now. The 52-week high on that stock is $15. So I reasonably expect that one might go to $15. And Friday, that stock went up $1 or $2. And it's a very steady stock. It does have a dividend, so a very steady investment. I look to expand my investments in PBI for sure. We have about 50, and I'll probably go to 100 shares very quickly and just be holding PBI. Just a nice investment. Even if it goes down, it's safe to purchase. Lowest I've seen it go is about $5, and it does very steady. And I think the company's been around since the early 1900s or late 1800s. So very steady investment, PBI, Pitney Bowes. Waiter, I do have 100 shares of Waiter. It hasn't been doing much, but it's basically on the bottom. Anytime you're in rural environment, you'll notice on the door there's a sticker that says Waiter. Basically, Waiter's the DoorDash or the Grubhub of rural America. So it has a substantial market share, but just not incredibly popular, and it is incredibly cheap. You can get, I think they're $1.80 a share, and I think it's on the bottom. So that's just kind of something I have. I'm going to continue to hold Waiter and see where it goes, but I can't say I reasonably expect any substantial growth. I have seen it go to $5 within the past year, but it did go back down to the dollar price range. So we'll see where it goes from there. Next, I have Rolls-Royce listed. With a name like Rolls-Royce, you know it's going to be a great stock. If I must say so myself, it's got to be great. No, but Rolls-Royce is just a substantial company, been around a long time, and their cars are very expensive, so a lot of people cannot afford them. But it's basically a darling of England, a company that I don't imagine that the politics over there would allow the company to go out of business. And the price is basically on the bottom. So I do have 100 of Rolls-Royce, and it does offer a substantial dividend. It might, I'm not sure how often it pays, but it does offer a dividend. So I do have 100. I think it's about $1 something a share. And it just feels good to say I own a piece of Rolls-Royce. I'll probably, get more into Rolls-Royce as we continue investing. So next up is Energy Transfer. Energy Transfer is a pretty substantial company, especially in Southeast Texas. You'll see it a lot. It's in the oil industry, and basically they transfer oil. So there's been a lot of pipeline issues, and their business has been picking up. It's just a substantial stock, a dividend stock. Nothing to look like we're going to have major growth or major bounce out of, but I do have some small investment in Energy Transfer. Urban One is on the list. That one looks like it bottomed out about $7.50. It's back up to about $9. It's tickling the $10 price range. But anytime you're going from, single digits to double digits, it's going to be, knocking at the door several times before it reaches back into the 10. So I expect it might dip back down again. And I'm looking at it like I'll probably continue to purchase the stock in the $7 price range if I can, maybe $8, just seeing, how high is it going? How low is it dipping as the weeks go by? I think it's the time to purchase, and I think that it probably will see substantial growth in the fall and especially into summer of next year. Next stock is Ford. I have owned Ford. I've had 100 shares for over a year, and so I purchased those at $5 each, and I'm just continuing to hold. I haven't seen a dividend. Once that dividend kicks in, Ford will be even better stock, but it's just a steady stock, a company that's been around for a very long time. THCX, I do have 100 shares, moving steady. Nothing to write home about right now, but just a steady stock, good ETF, one of the only ETFs that I even deal with. Marathon, I do have 100 shares of Marathon, MRO. We're just holding. We're not seeing any substantial growth, but that's just an old company. I'm happy. I'm very happy with those shares, and we're just holding. We're not purchasing anymore. We're just sitting on those, just like old couch, just sitting on it. Hall of Fame, HOFV. So we had some history with Hall of Fame. It didn't do as well as I would like, but as the football season approaches, I mean, there's some undeniable growth in the stock, 50 cents to $1 growth in the stock. So I'm just playing it. I'm looking like I'm trading it. I'm purchasing it low. I'm going to sell it high. I'm not in love with it. I'm not looking to hold it, to have it to hold. but I think that it's going to be a good trade. They just signed a deal, and the news of that deal shot that price up, I think 50 cents to $1, which is substantial money. If you had 100, that's $100. If you had 1,000, that's $1,000. So it's, the percentage was just, I couldn't ignore the percentage. I'm not in love with the stock, but I do have some. And if it goes up, I'm going to sell it, and I'm going to take the profit and be happy about it. Galectin Therapeutics, GALT. The news was that they had some substantial something beneficial happen in a cancer treatment trial. So, I'm definitely here for, I feel for anyone suffering from cancer. I definitely want anything that can be done about that terrible disease to be done. And I think a lot of people feel that way. So I went ahead and purchased some shares of that company. And, hopefully they do well. And I feel like any company that does well with cancer research and helping that out is going to see substantial growth in the stock price. So GALT is going to look into, probably just a sell type of situation. I don't know if it's a long-term hold, but I do have some investments in that right now. And I'm down to the final two, CARV, Carver Federal Savings Bank. I think this one's named after George Washington Carver. I saw a Wall Street Journal news story about black stocks and black-owned companies, and this one just really blew last week. I think the growth was like 50% to 100% or more. So it's growing substantially, and I think that it's getting a lot of interest, maybe, GameStop, AMC type interest. So we do have some interest in Carver, and I want to try to expand. It's a little more expensive. I really wish I would have bought it at an earlier price, but in stocks, you can't worry about the past. You just have to go from where you're at. I'm getting in Carver. As an African-American, I don't want something black-owned stock to do incredibly well, and I had nothing to do with it, especially as I call myself some type of professional trader. So I'm definitely getting into Carver, and we're going to continue with that stock. Another one is Broadway Financial. I'm a little more excited about this personally because I was able to get to holding 100 shares or more. I'm holding on Broadway Financial. It does have a low price that allows that for me. It's about $3 a share, and I'm hoping to expand. I haven't done a lot of research on the company, but it was blowing up at a percentage that I couldn't ignore, and I'm going to continue to research. But to my knowledge, the company is a African-American or black-owned company that has been getting a lot of interest lately. So BYFC. So that's all the stocks that we're definitely dealing with right now. Thank you so much for checking out the Bread Talk. We're praying for you. We're praying for your family, and that you excel in investing. Thank you so much for checking us out tonight, and we will see you on the beaches of the world.